Hello, in today's episode we are going to take a look at investing in Bitcoin. We will explain the basics of how it works, what blockchain is, the connection between Bitcoin and our portfolio, and we will discuss the evolution of the Bitcoin price using historical data. Welcome to my channel Invest with Jiri, where I cover long-term investing in the capital markets or investing in real estate. Along with the channel here on YouTube, I also create content on my Patreon, where you can see more videos and articles about investing for the closed community. Bitcoin millionaire overnight? I remember recent investment site headlines about Bitcoin's never-ending growth, about millionaires who became billionaires overnight, about Musk selling Teslas for Bitcoins and the emergence of lots of alternative coins based on the belief that the project would be successful and make investors millions. Let's be honest, the media loves to portray Bitcoin billionaires and their incredible stories of wealth and success. Such articles are in demand. Bitcoin has become popular. The younger generation was more interested in investing in Bitcoin, and this was mainly from the IT sector who had experience investing in cryptocurrencies. Over time, ordinary people started buying Bitcoin as well. Companies, investment funds invested in it, and attempts were made to create the first ETF listing the price of Bitcoin. We have two kinds of Bitcoin holders, so there are two attitudes towards Bitcoin. Short-term speculators trading Bitcoin on a daily basis, buying and selling. They just want to make money on Bitcoin, and it could be any other asset. However, the price of Bitcoin is very volatile, and that means big profit and also losses. The second group is long-term Bitcoin holders, referring to themselves as hodlers from the word hold, but with the letters D and L switched. These invest in Bitcoin for decades and only buy in on dips or increase their position in Bitcoin periodically for small amounts. Their goal is to outlast anything. They say they are saving into Bitcoin. Let's describe the basic idea of Bitcoin. Bitcoin became the first functional digital currency that you can use to buy a burger at McDonald's, a car, consumer goods on the internet. More and more merchants are joining Bitcoin and allowing you to buy their products with Bitcoins. The aspiration of the alleged founder or group of founders calling themselves Satoshi was to create a decentralized currency and uninfluenced digital money. Bitcoin has the ability to cut out the middleman, most often a bank, from transactions. The digital currency has a limited amount of bitcoins that is known in advance. The gradual release of bitcoins into the network is defined in the source code. This ensures the exact number of coins and cannot inflate the currency. Bitcoin uses blockchain technology to enable an intermediary-free transaction. The transaction is written to millions of servers and validated by all of them. Transaction histories cannot be changed, only edited to. Transactions are transparent and can be checked back by anyone. It is impossible for fraud to occur because it would be immediately discovered by others and the transaction would not be executed. What is decentralization? It means that no one, not even the author, individuals or governments can counterfeit Bitcoin, seize accounts, manipulate or create inflation on the currency. No one controls, manages, turns on or turns off Bitcoin. It is the centralized program code that has no center point. That is a place from which Bitcoin's code can be audited or influenced. Bitcoin does not correlate with other assets. Really? One of the alluring proclamations of Bitcoin enthusiasts has been diversification. They talked about Bitcoin as an idle diversified asset with defensive behavior during market downturns. When the markets fall, Bitcoin will rise and the portfolio will not see a major fluctuation in its value. Unfortunately, this is not true. Bitcoin, like the broad S&P 500 index, is declining, and we see this in a current 2023 recession. However, the difference is that the S&P 500 benchmark sees a minus 20% market decline, whereas we see declines of up to minus 60 or minus 80% for Bitcoin. Any significant drop in the broader S&P 500 index automatically affects the price of Bitcoin. For this reason, we can classify Bitcoin as an ordinary asset influenced by market sentiment. There is more to talk about around Bitcoin, but let's take a look at Bitcoin's price development in the past. In the historical data of Bitcoin under the symbol BTC/USD, Bitcoin to the dollar, we see that since 2009, when Bitcoin was worth a few cents, its price has climbed to a whopping $61,000 in 2021. This price increase happened over 12 years. We see the first significant price increase in 2013 when Bitcoin cost $1,300. This was followed by a period of 4 years until 2017 when its price rose to $14,000. After another 4 years, Bitcoin peaked at $14,000 and climbed to a whopping $59,000. In a few months, it broke the $61,000 mark. How big were Bitcoin's historical crashes? If assets only grew, we would live in an ideal world, but that's not happening, and Bitcoin is no exception. Let's look at the chart again and measure the percentage declines in Bitcoin so we can mentally prepare for a scenario in which we hold Bitcoin and its price goes down and down and down. If we zoom in on the 2013 drop in Bitcoin from a price of $1,200 to $200, we find that it was a drop of almost minus 82%. Oh my god! The peak in 2017 at a price of $14,000 was replaced by a drop to a price of $3,400 in 2019 with minus 75% drop. In 2021, it was a market crash due to COVID, when Bitcoin fell by minus 40% from a price of $59,000 to $35,000, only to return to $61,000 in a few months and fall to $16,500 by the end of 2021, raising 73% of its value. Is it worth investing in Bitcoin as a long-term investor? First of all, we have to ask ourselves, are we mentally able to withstand fluctuations of 50 to nearly 80% in the asset we hold over the course of several months? I believe that on paper these declines will not evoke any emotion in you, but believe that if you lose 80% of your portfolio, it will not leave you cold and you have essentially wiped out your account. And we don't know how Bitcoin will evolve further. Nowhere is it written that it can drop 99%. To get back to the same portfolio value before the drop, you would have to appreciate your portfolio by a whopping 400%. So what do you think about investing in Bitcoin? Number one, it is not an asset that diversifies in a significant way from conventional assets. Number two, to be able to make money on Bitcoin, we have to buy it cheap and sell it there. During the course of the investment, we do not receive a coupon like a bond or a dividend like a stock. Number three, personally, I'm not emotionally prepared for such a significant drop in any of the assets in my portfolio. Number four, the problem I see with Bitcoin is that it has no tangible real value. When I compare it to gold, which I also didn't talk about very nicely, link here, it has at least some minimal value and has uses in jewelry, electronics, etc. It can be put to some use. Bitcoin has none of that. It's a piece of well-written code and then a bunch of faith by its holders. Yes, it's a revolutionary technology, I admitted it, I like it, but I personally wouldn't buy it. So I leave it up to you to decide how you feel about investing in Bitcoin. I understand that 100% appreciation is tempting, but please consider the information presented. Thanks for watching the video, have fun and invest elsewhere than Bitcoin.